Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your FinTech's growth. Join Growth Gorilla's founder and managing director, Shamir Sajdev, and some of FinTech's hardest-hitting marketers and leaders.
Welcome everyone to today's episode of the FML podcast. Today we're joined by Luke Ladyman, COO and Co-Founder at Cheddar. Luke, thanks for joining us today.
Thank you for having me. I really appreciate it. COO and Co-Founder, it sounds very formal, doesn't it?
It does,
COO
doesn't
is
it?
kind of like a bit of everything, but I like it.
Yeah, you suddenly realise that you're adulting hard at that point when you're COO and Co-Founder. So
Absolutely. I think it's like an acronym for HR, legal, marketing, finance, everything. But yeah, that's what we're here to talk about today.
yeah, it's all the stuff the CEO doesn't want to do, basically.
Exactly that. Exactly that. Spot on.
Although I will say this, if I look at my head of operations, she's the glue that holds us together. If she's gone, I've got no idea what's going on. So cool. Well, look, Luke, give us a quick overview about yourself and I suppose your journey so far. And from what I understand, you were in aviation and management consulting, and now you're a co-founder of FinTech app. So it'd be great to hear about that.
Yeah, it's quite a colourful past. I started, to your point, as an airline pilot. When I was 19 years old, I jetted off to New Zealand to train to be a commercial airline pilot. Came back, worked for EasyJet for 4 years or so, moved across to British Airways. The beauty of being an airline pilot is that when you're flying, safety first. But when you have downtime, you have a lot of free time kicking around. And I've always been fascinated into how things work. It's actually how I became an airline pilot in the first place. I was fascinated by airplanes, how they worked, how the hell these things go into the sky. I still think it's magic now, to be fair. I don't quite believe that they're held up by air, but that's for another time. And that's where I got into business, actually. I was fascinated by how businesses operate, in different industry sectors. And I, at the time, was with somebody. My partner owned a lingerie brand, and I actually stepped in to help her transform that business from a company doing okay into an award-winning company actually in 2012, Best New Laundry Brand UK to be exact. And that transformational process really got me into the weeds of how you can convert a business from, its operations doing okay and efficiencies to actually becoming a full-fledged market leader. And that's where the birth of my management consultancy came in, where I was doing go-to-market strategies with brands such as BMW, Ferrari, Guess Jeans. And whilst working on other people's businesses, I was learning all these skills, attributes that I then applied to myself to really create Cheddar today.
Yeah, definitely want to dig into that more. Before we jump into that, though, it'd be great to kind of understand, and for the audience listening, what is Cheddar? What problem are you solving?
I alluded on to the point I was an airline pilot back in the day. And we'd always go traveling down route. You'd be flying to Cape Town, Dubai, all around the world. And when the bill would come, it would quite often be myself that would just pay for the bill, and trying to chase money back afterwards was quite tricky. So Cheddar initially started actually as a person-to-person payments platform, where without having to share sort code and account numbers, I could say to yourself, oh, you owe me £50, here's a payment link to pay me back. What we found actually is that in the world of, in the UK, the fast payment system is actually quite straightforward. It's not a pain point that is something that would, convert our business into it's more of a nice to have to keep it short. So Cheddar itself started out as a solution for payments. Making payments free, making payments frictionless, making payments easy. The reality is that through faster payments and card networks, is that actually payments work pretty well. If you really get into the weeds of it, payments work very, very well. And a lot of businesses actually, although they pay sort of higher card fees, and when I say higher, cash is free. Cards these days you can pay. If you look at the likes of Stripe and SumUp, they charge like 1.5% to take a card payment. Most companies don't mind that, to be truthful. But they like to be free, yes, but it's super frictionless. So what we actually discovered through speaking to both the brand and customers on the platform is that loyalty is actually the pain point. So what do I actually mean by that? Well, on Cheddar itself, there's two sides to the marketplace. We have consumers and we have brands, which have organically come to fruition. To get users onto the platform, when we had the payment solution, we actually introduced an innovative open banking rewards platform, where when you join Cheddar to link your bank account and get a sort code account number, We also ingest your transactional data. We realized we're still on the wealth of data here that we could be leveraging to unlock value for the consumer. And the pain point we fell upon is that actually consumers would join the platform if you reward them for being there. So what Cheddar pain point was solving is that if you look at Amex these days, for example, everybody wants an Amex for the rewards. You pay at a merchant and you get points back. Amex itself is kind of exclusively held for people with like perfect credit scores and like fantastic incomes. So where I'm going a roundabout way here is that the pain point Cheddar's solving is basically democratizing finance and financial inclusion for everybody. So anybody who wants access to, rewards, benefits, that's what Cheddar's doing. And we're on that journey today of like person-to-person payments. We've got a rewards ecosystem that's created for both consumer and merchant. Merchants themselves to acquire new customers find it actually very tricky. There's a lot of noise out there. You as a growth expert would know that trying to do Facebook marketing can be sort of quite tricky where it's based on cookies and likes. Cheddar itself uses transactional data to actually target customers to match the perfect customer to the perfect merchant. And that's what we're resolving today. And we've got something launching very soon as well, which is going to be quite innovative to sort of help in the credit space. So the key there is sort of the payment we solve is around democratizing financial inclusion.
So I just want to go back a step. We sort of talk about the payments element and that side of it. I think you're absolutely right there. I think there's a lot of brands in the UK, FinTech brands that have launched trying to solve that sort of payment problem on the back of Venmo's success in the US. But to your point, the payment system in the UK is actually pretty robust, pretty quick, pretty seamless versus kind of the infrastructure that they have out in the US. So it's really interesting that you've made that pivot and you realized that and you made that pivot really, really quickly. So I kind of want to talk a little bit about that journey because obviously it was on your website. You've got, I think it's 100,000 users now on the platform. It'd be great to kind of understand how you kind of went from, I suppose, acquiring your first few thousand and how you've managed to scale that to 100,000 today.
You make an incredible point there around Venmo. Our initial business model was built around the Venmo, Cash App, Zelle, successes from the US and trying to replicate that in the UK, which kind of touched upon how we got our first users. So we actually went to university with a big spin wheel that said, download Cheddar, and when you join the platform, we'll ping you £5 to £10 basically using the platform as an example. Yeah. What we found is, again, it was a nice to have. We went to universities. We would acquire, 100 students per day, thinking that through the viral effect that Cash App and Venmo had, their success in the US would be replicated in the UK. We found that wasn't the case. We found that actually being present on campus, we could acquire, 100, 150, 200 students per day, but they actually would be motivated to then refer their friends to the Cheddar platform. And it wasn't until around 6 months later that we, through customer feedback, asked them, well, why are you not referring your friends? We discovered that actually rewards was the key element there, is that they don't feel empowered to refer friends because actually asking for money back is still a bit of a tricky, awkward thing to do in the UK. So what we actually did we then pivoted and introduced Open Banking Rewards platform. When that launched, we then actually did a marketing event called Pub in the Park, which is where all these chefs from across the country come into St. Albans Park, for example, or Chiswick Park. And we sponsored that event and said to customers, hey, when you come to Pub in the Park, link your bank accounts to the Cheddar app, go and shop around these various vendors, and you'll get cash back on your spend. And that's when we saw from, 10, 20, 100 customers per day per event, that actually you're acquiring 1,000, 2,000 customers per day. And that's when we really realized through feedback loops of why did you join the platform? All the cashback rewards is what made it super sticky. And that's where we are today.
And then you started acquiring, a couple of thousand users per day. I suppose, what was your approach? Did you sort of go, right, let's just rinse and repeat that to try and scale? And I suppose, how much did you rinse and repeat and how scalable was it really?
We kind of looked at it as wells. So take the events, for example. There's only so many events you can go to. Pub in the Park, for example, had 12 events, and each event we'd acquire 1,000 customers. And we had our referral program that we activated. What we actually discovered, again, is that customers will refer friends, but what you usually had is one person would refer, let's say, 300 people, and a bunch of other people wouldn't refer anybody. What you actually want is like K-factor to be above one, where in an ideal world, all of the users refer 2 users, those 2 refer 4, those 4 refer 8, so on and so forth to get viral growth. What we did when we had our referral program is that we'd go to these events, and at each event, what you basically discover is that there'd be one or two influencers that would organically be at those locations. So what we'd see is actually spikes. Is you go to the event, 1,000 people would join, and then one or two people would actually refer, in some cases, 2,000 to 3,000 people. So we actually did initially in the very, very early days is we organically found within our database all these influencers that would pop up. So in the early days of Cheddar, we'd jump on that. But as soon as we saw somebody refer more than 20, that would be a signal that actually they had the potential to refer 2,000. And we jump on that immediately. So in the very early days of Cheddar, how we got to our first 50,000 users was actually through paid referrals, but more specifically, influencer marketing. The influencer marketing would almost be inbound marketing, where they'd find the platform, jump on a referral scheme, and then use that to scale up to 50,000 people. That in itself, answering your question, we'd rinse and repeat that. But then again, that had its limitations. There's then again some influencers in the UK. Then you have to go to paid influencer partnerships where you have to then do outbound marketing. Go to them, ask to join the platform, and then there's other different growth loops that we now embark on.
You've used the word a few times. You've said discovered. When I think of the word discovered, I think, something's just landed at your feet. But I suspect that it's not been a case where this insight has suddenly popped up out of nowhere. It's you're making the distinct effort to uncover these insights. I mean, it'd be great to kind of hear your sort of approach to, I suppose, the research that you're doing across your platform in terms of sort of how you're developing those insights, whether it be customer feedback or going through data. I mean, what's been sort of Cheddar's approach to kind of discover these things and uncover these insights?
You'll notice as a growth expert yourself is that there is no playbook per se on how to build a fintech, how to scale it. You have the experiences and case studies from other businesses and brands that you can jump on. As we proved day one, our idea of Cash App, Venmo, Zelle, of going to university and then you can acquire 100,000 users just isn't the case. So what you have to discover is actually, again, I use the word discover there, is that you quickly have to learn and iterate on your feet exceptionally fast to understand, right, what is and isn't working. And there's two ways of doing it. You've got the qualitative approach where you actually speak to customers. And what is it about our app that you like and dislike? And it's not just those who are using the platform a lot, it's those who aren't using it, to understand why aren't you using the platform, why aren't you referring friends, and those who use the platform daily, actively, and you're referring 2,000 plus people, what is it about the platform that you like and dislike, and having that feedback loop to discover actually what does and doesn't work as both a brand, as an app, and as your approach to marketing. That's the qualitative side. And then you have the quantitative side as well of, where do you get the signups? Where don't you get the signups? And, you have a hypothesis. Can you prove it or disprove it and move fast? So the university one, for example, we actually spent a bit too long on that one, being honest with you. We pushed that for about 6 months. Now we push initiatives, we have sort of weekly to monthly cycles where we just move exceptionally fast. A new feature, a new marketing initiative. We hypothesize, we plan it, we launch it, and honestly, 50% will work, 50% won't work. We don't look at the 50% that don't work as a failure. We look at that 50% that don't work as a learning lesson and then plug that back into, okay, why didn't it work? Let's iterate, let's change, and let's grow from there.
That distinction between sort of like it's not a failure, it's a lesson learned. I think there's that phrase of, I think it wasn't 99 failures, I just found 99 ways of not doing it, right? And I'm a big believer in that. I think the sooner you get those learnings out of the way of the way it's not going to work, the sooner you can kind of get to the bits that are working. And then your next challenge is, right, can we scale this? How do we double down on this? How do we make more of this? And how can we develop this idea that perhaps we can't scale into a version that potentially could scale, and will that work as well?
Exactly that. And it kind of touched back into our management consultancy days, where as a management consultant, you were hypothesizing a lot and you were sort of advising brands on best practices. And they would try it. Oh, well done, sir. We'll give these a try, give that a try. Honestly, the best way to learn is just to do, and genuinely to do. And you have to just do a risk versus reward. What are the benefits of doing this activity? What are the risks? What's your intuition telling you? Are there alternatives? And actually, if we did nothing, what would happen? Obviously, there's a ROI to be had. Not all initiatives you can do. We have some initiatives that cost you £1,000, some that cost you £10,000. £1,000 ones you do, the £10,000 you have to be much more selective in what you do. So it's all about just iterating and having those feedback loops.
As a COO who seems heavily involved in the marketing side of things, you sound very, very process driven. I'd really like to get your take on, I suppose, the importance of process within marketing. And there's a bit of sort of a backdrop to that. I was actually doing a roundtable yesterday, and one of the issues that came up was what one of the marketing people there mentioned about the fact that she was having a bit of an issue getting enough content out the front door. And I kind of said, well, that sounds like a process issue. So kind of with that in my back of my mind there, it'd be quite kind of great to kind of hear your perspective on the importance of process in marketing.
I think when you speak in the podcast and you have that think with hindsight, you can think about how you process your lessons and learnings. To be very, very, very honest with you, I'm sure everybody listening to this that runs a FinTech will back me that every day is controlled chaos. And what I mean by that is there's so many things that happen at any one time, genuinely at any one time. And a relatively small company like ours, where you haven't got all the resources on planet Earth, and as COO, to your point, you're doing marketing, but you're also then doing the legal and the finance and everything else. It's around being calm, being controlled, and the process is that ability to stay calm and just analyze what is in front of you and what's happening. Documenting incidences of success, documenting instances of failure, or lessons as we've worded it, and actually understanding that there's no knowns that you have. I think it was a very famous presidential speech of known knowns, known unknowns, and unknown unknowns. Any given day, if you plan something out, there are no knowns that you can process, that you can map out, plan out. Those are like feature releases, for example. But then, if you launch a new feature, you just don't know how it's going to be perceived by the public. And it's having that understanding that actually we have KPIs in place. We expect this product or marketing effort to return this. If it does, fantastic. If it doesn't, we'll deal with that at the time. And in that sense, it's a process that has enough flexibility in it to deal with success, or we call it failure, with lessons in that regard. So it's definitely not a magic machine of growth where you do something and it's rigid in that regard. I think where the calmness and the perceived process comes from is just the excitement of actually, it might work, it might not work, but actually doing it in a compliance, we call it like a risk-based approach, having it in marketing as well. Like, what's the risk of it not working, and what's the risk of actually not doing it? If we don't do this activity, we won't know unless we try it. And with Cheddar, everything we do is quite novel in our approach to doing it. So actually, there definitely is no playbook to it because we're creating new technologies. So with that in mind, that is the process.
I want to switch streams a little bit and talk about your partnerships. In a way, your product is still a two-sided marketplace. You need the brands on the platform to make it appealing to the individuals, and you need the customer base to make it appealing to the brands. There's a lot of apps out there that are two-sided marketplaces, and we've talked about marketing in terms of acquiring the users on the platform, but I think it's a very different type of marketing or business development or sales or whatever it may be to acquisition the brand partners as well. So it'd be great to kind of understand and dig into kind of how you've approached that. And so, sort of opening question, have you used like an existing platform with partners on there that you've sort of plugged in as an API, or have you directly gone out to these partners, or is it kind of a mixture of the two?
This goes back to my consultancy days, really, of like owning the process. Cheddar itself, for example, as a platform, we built it from the ground up. And what I mean by that is we're an open banking platform that doesn't use a cloud or a team called TrueLayer. We actually built open banking infrastructure. And that lends itself to our approach to partnerships as well. We actually acquired a company that had a footing in the open banking reward space from day one. They had a few brands on the platform, I'd say maybe one or two tier one brands in the UK, which gave us some insights into how to run a two-sided marketplace in that regard. What our approach was, and it has always been, is to own that direct relationship with the retailer. Because our USP is actually like understanding their pain point. So from a marketing perspective, actually speaking to them and understanding, right, tier one, tier two, tier three retailer, what is it you're trying to achieve? What is your biggest pain points with the way the world operates today? And can we solve that through novel technologies that this thing called open banking? The affiliate space, for example, I'm sure we'll get into it later, on cookie tracking and card link offers and whatnot. We offered something a little bit different in this open banking space. So first is understand the pain points, and also appreciating that if you go to these tier one brands, we used to approach them with, say, 10,000 users, going on a journey with them, knowing full well that the biggest grocers won't join the platform at that stage, but you can take their pain points, you can build a proposition and test and learn partnering with smaller brands first, and then building case studies with the smaller brands, and then going back to the bigger brands at a later date saying, hey, we took your pain points where we built this product and we proved it out with this much smaller brand. We've shown them growth, significant growth month over month. What say you about running a campaign, test partnership? We can, have no red tape, no barriers to entry, both have skin in the game, proving that out. And when you prove that out, and then you go to the next brand and so on and so forth. So that's how we've got those brands on the platform. And we now work with anything from the smallest brands in the UK, smallest being like the newest brands, all the way up now to the likes of Tesco.
Let's dig into that element around sort of the cookie tracking and the affiliate stuff, because I have a sense of kind of how that would be different, but it'd be great for you to kind of take us through that.
So as I mentioned, we have a novel approach to how we look at things in Cheddar from both the consumer and the merchant lens. So if we go for a second on the consumer side of things, the world we operate in, when we looked at how can we reward the customer, what naturally fell into our lap was this idea of cashback. And for those who aren't aware of what cashback is, it's where you shop at a retailer, a merchant, and through a third-party platform like Cheddar, you'll get money back for making that purchases. Some people look at it as a discount. It's actually more of a loyalty reward as such. Some cashback comes in the form of points. To an extent, you could look at Amex, for example, where you get points that can then be converted into flights and hotels, whatnot. Cheddar converts that back to you as cash. So traditionally, for a consumer, you have the likes of Top Cashback and Quidco, who are legacy brands, 10, 15, 20 years old, who have tens of millions of customers on their platform. They do a great job. You have to click onto a link that then goes through their websites onto the merchant's website, online only. You make a payment, and the cookie, the tracking online, will monitor your journey and reward you back for that payment that you made. That's a traditional affiliate model. The evolution to that was what we now call card link offers. So card link offer basically uses the MasterCard Visa network, where if you go into your Lloyds banking app or Santander app or whatnot, you'll see some offers in there. When you activate those and use your bank card to make a payment, Visa, MasterCard track those payments. It goes back to the brand, and those brands will then will reward you on your spend based on data passed back from Visa, MasterCard. Cheddar's the next evolution of that, where you can actually link all of your bank accounts and credit cards to Cheddar, and we securely ingest through open banking your transactional data, and that transactional data is monitored securely, of course, through encrypted technology and APIs that connects the back end of banks, which we're allowed to do as a regulated entity. And it's based on that transactional data that we can then give rewards to customers. Now, we've actually got another evolution to that, because what we found is that technology is very new, and it meant that actually adoption from customer and adoption by merchants were a little bit slower than anticipated. So we also layer on this new open banking technology with legacy solutions such as gift cards. So what you can now do with Cheddar, for example, is buy a gift card for, let's say, £100 for Tesco, and you'll get 5% off. Whereas if you pay by bank, which is a solution that we've generated, that you can get 5% on the gift cards you then purchase for self-use later.
That sort of brings about the question when you say, how we found, has there been much friction in terms of your users with adopting open banking? And I suppose the part two of the question, have you found that friction is now decreasing?
Yeah, very good point, actually. And I kind of avoided that. And I didn't answer that in the first point, is that customers are used to the affiliate cookie link way of doing things, Top Cashback, Quidco. That's what they've been trained to do. And to an extent, a lot of people now are a bit more familiar because the banks have these card link offers. People are familiar with that as well. We've been told from day one to never share your banking information with anybody. So then when an app like Cheddar comes along with this new term called open banking, which we didn't invent at all. It's actually a mandate from that thing called the EU that we used to be in back in 2018, that a lot of platforms now use it, is that by secure linking your bank account and giving your transactional data, your balance information, there's a lot of friction there. You have to go to Cheddar. You have to select your bank, switch it to your bank. The banking app pops up, says, do you consent to sharing information with Cheddar? That, in the early days, customers didn't like that at all. We'd see a drop off of 30% when people would sign up to the Cheddar app at that point, thinking, is this secure? The likes of Plaid back in the day in the US would actually use a screen scraping technology where you go into a bank and they actually go and scrape and crawl in all the information from said bank account. Cheddar doesn't do that. And what we found was that we had to educate customers on actually what is open banking, but more importantly is actually demonstrate the value you get from sharing your information. So it requires, if you remember, we go back to the early days of when influencers would come on and refer 2,000 people. It's one thing me or Cheddar saying, hey, it's a safe platform, here's how it works. It's quite another when you have proof points from friends or influencers that actually say, hey, here's open banking technology, here's why it's safe. Oh, and actually on the back end of that, I've unlocked savings of £20 to £50 per month. So I'd say that initial friction, we're getting through it. And I say we've now got through it, especially now that we've layered on legacy solutions like gift cards and things that people are familiar with. And we realized that actually, I think this is a famous sort of statement from Steve Jobs where he said, don't necessarily lead with the most innovative technology day one. Actually understand the customer pain point first and use technology to unlock value and progressively introduce new technology over time. And that's what we discovered with Cheddar. So when we led day one, which is open banking, customers didn't quite understand or like it, and that's okay. And as we peeled back and actually made it a bit more simple, we've introduced sort of personal finance management and other tools on the platform. Customers have warmed up much more these days, and actually we've seen that that friction has all but gone. I think our drop-off now is actually more in the realms of about single digits in sign-up.
I mean, I think it has become massively mainstream. Obviously, HMRC, you can pay your unfortunately, you can pay your tax bills by open banking now. And even e-commerce sites now are offering like a pay-by-bank solution. I was ordering our Christmas dinner from a site and they had an option to pay by banking. And I mean, they offered a small discount if you went down that route. So they've obviously financially incentivized people to take a look at that. But I think had they done that maybe a year, 2 years ago, I don't think any amount of financial incentive would have worked there. But, I think now people are sort of very much comfortable with it. So, yeah, I think we're going to start seeing more and more with retailers.
And that's a very good point. HMRC do just that. Obviously, HMRC payments are much larger than your average. The average order, must be in the thousands as such. So that makes sense. If they're taking card payments, there's a percentage there that actually, through pay by bank, they're all but gone. I think actually you can charge a fixed fee of 10 pence as opposed to, 0.5, 50 bips or 0.5% or so. So it makes complete sense for HMRC. And that's what we find is that actually, to your point, is Cheddar still has the payments functionality, by the way. And we actually use pay by bank to acquire funds, then sell our gift cards. We do that because we actually eradicate all card fees and pass the savings on to the customer, which means that we can actually give a higher discount or a higher cashback to customers. And our idea is just that is let's build the customer base with the rewards. And then once they're on the platform, we can then, I wouldn't say cross-sell, we can cross-introduce other solutions. And one of those is the payments, for example. So what we've actually seen is that where initially payments weren't big at all, the rewards and loyalty piece actually blew the app up, for want of a better phrase. And actually won us an award. We got Best Newcomer at the British Bank Awards this year, being likes of Chase Bank. Is that people see the value, and then once they're on the platform, what's this button here? This does payments. And now what we're actually seeing is that the payment solution on the platform is now proliferating because people are much more comfortable understanding the solution, they're getting value from it, and then they try other services on the platform as well.
I do want to ask you, and it would be a great place to sort of go, well, but what's next for Cheddar? But before we do, there's one bit that I do want to talk about and just understand really as well is just talk very sort of briefly about sort of loyalty and retention within Cheddar, because I think like as an avid user of Quidco, Top Cashback, Amex, and I love a good point system and a reward system, right? And I love a good discount. How have you approached maintaining customer loyalty and that retention piece with your customers? Because speaking from experience, those that are incentivized by reward have tendency to be a tad promiscuous when it comes to sort of moving from app to app. So it'd be great to kind of understand how you tackle that.
Your retention engagement is key to monetization, user growth, everything. So I think the key recipe, the key solution is hyper-personalization and hyper-relevance in that regards. And we're seeing it these days with the likes of they're using technologies like AI and Gen AI and whatnot. The more you can personalize a solution, the much more sticky it is these days. A good example we have internally with Cheddar is that, how many times have you received an email saying, check this offer out? And it might be, I don't know, pet food or pet insurance, but you don't own a pet, for example. It doesn't make any sense. So how Cheddar makes the app super sticky. And bear in mind, we make our revenue by if you make a purchase on the platform or with a partner, we have a transactional business model. So it's in our best interests to ensure that you get the most relevant offers to then shop. And that's how we generate our revenue. It's to make sure at the right place at the right time, we give you offers that are suited to you. The way we do that is through understanding how you use the platform. So if you're on the platform and you're using, you're making purchases at a clothing brand, you will receive offers similar to that clothing brand. But that's not new. That's something that anybody can do. We go one step further than that. And actually, the Cheddar Secure platform will actually analyze transactional data. And based on your way of life, do you have kids? Do you not have kids? What's your income? Do you go on holiday? Do you travel? Where do you work? Taking all of those data points, we can actually understand your personal bespoke interest, and you receive offers hyper relevant to you. And what that will look like is brands are relevant to you, but also the actual cashback rate that you get will vary based on how you interact, not just on the platform, but how you interact in your life. So we have partners on the platform that will want you as a loyal customer because they understand that actually you shop a lot at fashion brands or grocers or whatnot. And other grocers will want to win share of wallet. So the cashback rates actually vary. I think that's the biggest difference. If you go into platforms right now, you get the same cashback rate across for all users and all brands. Ours is different. That it's all very smart algorithms that look at who you are, how you operate, and then it tailors it. No two apps will be the same between the 120,000 plus users, and that's the secret sauce.
That brings about the next question, and there's no way I can't ask it. Have you started implementing AI? And if not, how do you think AI will change your business, if at all?
We don't have AI in the sense of this idea that people have like ChatGPT, sort of open AI looking at your information and a robot determining what you do and don't get. Ours is very much what's like machine learning based, where it understands that actually here's the transaction information, and based on transaction information, we believe you like this offer. That in an extent, it's not me sitting behind the scene. That is the coding that generates that information and presents it to you. So in its most basic form, that's artificial intelligence giving you a solution, giving you a proposition that optimizes the platform for all 100,000 plus users. To answer your question, yes, AI has been around for a long time, and it's the artificial intelligence that is generating those solutions. What we're not doing is using today's technology or AI, the generated AI, to go through information. The reason for that is that it's very, very new technology. And we're dealing with people's data, transaction data, and what we can't do today, unless we understand it fully and can build the model in-house. As I mentioned previously, everything we do, we own. And when you start to use third parties, those are points where data can be leaked. I'm not saying that third parties aren't secure, but those are opportunities where you can get data breaches. So until we understand it fully, answering your question, no, we don't use any form of like the new latest generative AI. However, it excites me massively because I know the computing power required to deliver what we deliver. And, looking at the solutions on the market and the way it's going, what humanity, what the tech system's been able to build in the last year, 2 years is mind blowing. So I definitely think there's an opportunity for us and others to be leveraging that technology, again, to go down hyper relevance. So can you pull other data points? Can you not just pull in financial data, but can you pull in social data? Can you pull in behavior analytics? Can you pull in all this information and have a system that actually can analyze it in a microsecond to then spit out something that's relevant to the user, and have an interface with the user as well. They can ask questions, almost like a personal finance manager in your pocket. What do you recommend? How can I do this? And have sort of generative AI create that solution for somebody to increase their wealth and financial well-being. Super exciting, something I look forward to. But I'd say that definitely us as a company, we're not just quite there yet. Everything we do has to be super safe, super secure. So we're treading carefully on that one.
Before we jump into our quick fire round, in sort of 30, 60 seconds, it'd be great to kind of hear what's the future for Cheddar.
There's actually a quote that sits on my phone, and it's one by someone called Alan Kitely. I can sort of show it on the screen to show that I'm not talking rubbish there. It says, once in a while, it really hits people that they don't have to experience the world the way they've been told to. And it kind of comes on why Cheddar was built, is that there are some things in the financial ecosystem that I don't quite agree with and doesn't quite make sense to me. The biggest one is around financial inclusion. So to keep it short, is what's coming next for Cheddar is what we have today is a nice to have, is what I'd say. Cashback and loyalty is a vitamin, for want of a better phrase. What's coming next is that antibiotic/painkiller, whereby we will be making the financial ecosystem much more inclusive for everybody, bar none. And that'll be leveraging transactional data to unlock financial freedom for the UK to start with.
Sounds compelling. And I'm very, very interested and intrigued to find out what it is. Before I let you go, Luke, a couple of questions from our quick fire round. What podcasts are you listening to at the moment, or would you recommend?
I've got two. Being marketing podcast, I can't not talk about Lenny's growth podcast. It's one of the best out there. And honestly, I know everybody listens to this, but the content is incredible. Is Diary of a CEO by Steve Bartlett is just inspiring.
He's hit I think 1 billion downloads today. I think that was the news that came out.
It's phenomenal.
I've got my issues with Stephen Bartlett, but we'll say that for another day. What's your favorite FinTech Apple brand aside from Cheddar?
I would say Plaid. I think what they're doing is incredible. They're open banking led, but actually what they're doing is the space they're moving into is quite exciting. So if you don't know what they're up to, I'd definitely say check out Plaid.
And what books are you currently reading, or would you recommend?
I would recommend everybody to read Atomic Habits by James Clear. Just how micro changes you can make every day in your life, how that can build into a different way of living. So yeah, I'm actually reading and rereading and will reread continuously Atomic Habits by James.
I suppose my last question, what's the best bit of life advice you've ever received? Be
yourself and enjoy everything that you do. We all go through tough times, me included, and it's to enjoy yourself. And, if you're not enjoying yourself, be open and honest about that. Seek help where you need to seek it, both business and personal. But life's too short not to enjoy yourself. So, brilliant place to wrap up. Luke, thanks very much for coming on the podcast today. It's been an absolute pleasure having you on.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.